I think there's a bunch of catalysts next year that will likely send Bitcoin to all-time highs. One of those we were just talking about, the spot Bitcoin ETF, that unlocks a huge amount of demand into the market that's been sidelined. We talked about there's 60% of financial advisors and investment professionals are just waiting for an ETF to invest. You know, they control trillions of dollars of wealth in America. So you have assets flow or demand flowing into this asset class that should drive prices up. You also have the halving coming up, which honestly, a lot of the people that we talk to day to day at Bitwise aren't thinking about the halving, don't necessarily understand the halving, and aren't thinking about it. But obviously, it's a huge shock to the price mechanics of an asset when you have increasing demand from a spot Bitcoin ETF, you have falling new supply from the halving, and we think that creates this beautiful setup in this bull market that we're in to send Bitcoin to all-time highs this year.
Hey everyone, welcome to the Edge Podcast. I'm DeFi Dad here with Nomadic from 4RC. Today's show is a special end-of-year episode with our friend Ryan Rasmussen at Bitwise, one of the largest crypto asset managers in the world and known for managing the world's largest crypto index fund. In this episode, we'll talk through Bitwise's top 10 predictions for 2024, including whether we'll finally see the long-awaited spot Bitcoin ETF get approved. But before we do, just a quick word from our sponsors who make the Edge Podcast possible. For most of us, our crypto journey started with MetaMask. And now with MetaMask Portfolio, we can do so much more. MetaMask Portfolio puts you in control. Use the dashboard to see all your assets and balances across your wallets in one place. The buy feature allows us to buy crypto assets effortlessly with fiat options such as PayPal or credit card. The swap feature allows us to swap any tokens anytime by finding a selection of available rates. The bridge feature allows us to bridge between networks including Ethereum, L1s, and L2s based on the best price and fastest delivery time. And with the stake feature, anyone in a few clicks can stake ETH and earn rewards. Do more in Web3 your way with a safe, simple, and convenient tool that's all in one place. Track and manage your Web3 everything at metamask.io/portfolio. Mike, before we get back to the show, can you explain what is liquid restaking?
Everybody at this point is familiar with liquid staking. It lets you take your staked ETH, mint a liquid staking token, and then use that token in DeFi. Well, the hottest thing in staking right now is restaking. It's the ability to reuse your staked ETH to provide Ethereum's trust layer to other services that want to benefit from it. Services like data availability layers, Oracle networks, other blockchains, and beyond. The benefit of restaking is that you get to earn additional staking rewards on top of your normal staking rewards. Well, currently, if you want to restake your ETH, your only option is to lock up your ETH. The reason that's a problem is because you can't use your restaked ETH in DeFi. We are launching ETH, the ETHER.FI liquid restaking token, because with liquid restaking, users get the benefit of staking rewards, restaking rewards, and they get to collect loyalty points for ETHER.FI and EigenLayer through this token. So it's the easiest way to get exposure to two up-and-coming early protocols, and on top of that, get all the benefits of staking and restaking.
To learn more about ETH liquid staking and liquid restaking, go to ETHER.FI.
It all started so simply with CryptoKitties and Maker on Ethereum, but quickly became complex with more applications and many chains. Today, everyone agrees UX issues are the biggest blocker standing in the way of crypto adoption. Introducing AVOCADO. Multi-chain UX redesigned from the ground up. The first wallet to abstract networks, accounts, and gas. One gas tank to pay transaction fees on all chains in USDC. And native access to INSTADAPP's powerful, custom DeFi strategies. AVOCADO, one wallet to rule all chains.
All right, let's introduce Ryan Rasmussen, the senior crypto analyst at Bitwise. Ryan, welcome to the Edge Podcast. How are you doing?
Hey, I'm doing great. Happy to be here. Looking forward to our conversation.
I'm going to let you give the elevator pitch here on Bitwise, but I've always known Bitwise as one of the traditional finance folks that is a close partner to the DeFi world and like the greater crypto world. You all, I believe, are one of the largest crypto asset managers in the world. If I'm not mistaken, one of your index funds, I believe, is the largest in the world. And we're recording this prior to a hopeful spot Bitcoin ETF coming in 2024, which we're going to talk about in the predictions. So anyways, you've always been very forward thinking. And I want to credit the fact that it's probably been you among a few folks there who has been like our vocal advocate for DeFi at a TradFi firm. So anyways, with that all in mind, would you mind like just giving some background on Bitwise and, you know, what do you do there? And like I said, we're excited to hopefully talk a little bit more about this spot Bitcoin ETF. We want to see you all get approved.
Of course. It's all very exciting right now in the world of crypto, and I appreciate the kind words. You're too kind. We are the world's largest crypto asset manager. We have the largest crypto index fund in America, and that is the Bitwise 10 Large Cap Crypto Index. But at a larger scale, what we do is serve financial advisors and RIAs and hedge funds and family offices and really try to meet traditional investors in their space by offering crypto products. And so we've been around since 2017. We've gone through a few bull and bear markets now, and the entire time what we've tried to do is help educate our customers and our clients on what crypto is, why it matters, why it's an asset class that's here to stay for the long term, and why they should be allocating to crypto on behalf of their clients. And so we do that through white papers and webinars, and we go to TradFi conferences like Barron's events and other events like that, and we present Crypto 101, Crypto 102 materials and answer their questions and join meetings with them, with clients, and talk crypto. And then we have a wide variety of products. We have a large suite of products, whether those are indexes that track the top 10 crypto assets. We have a DeFi index, which I happily support and am an advocate for here at Bitwise that tracks the top 10 DeFi assets. We also have a NFT index. It was the first NFT index that tracks the top 10 blue chip NFT projects. And then we have a bunch of other strategies. We have a few futures-based products. We have a few private placement products. We have active strategies that we run nowadays as well. So we've really grown over the past 6 years into a multi-strategy asset manager. But our main goal is just to serve traditional investors, and that's, like I said, financial advisors, RIAs, hedge funds, family offices, and introduce them into crypto and introduce crypto into their portfolios.
Ryan, can you summarize for someone who's like newer to hearing about the Bitcoin spot ETF, like why is there such an obsession about that? You know, why do we want that product to be approved by the SEC versus all the other products that are already offered by Bitwise?
Yeah, it's a great question. The reason why a spot Bitcoin ETF is so important is because ETFs are one of the main vehicles that traditional investors access markets through. And there's this, I think, misunderstanding to, you know, those retail crypto traders like you or I who kind of manage our own funds, that we don't need an ETF because we just access Bitcoin and crypto through Coinbase or through a decentralized exchange, and we self-custody, and there's all those beautiful elements of crypto that exist when you're a retail trader. But that's only 20% of wealth in America is retail driven or self-directed. The other 80% of crypto is driven by RIAs and financial advisors and professional investors who need ETFs in order to access these asset classes. And so most of the times it can be driven by compliance within their own firm. So if you're at a firm that doesn't allow you to access crypto directly or hold spot Bitcoin, for example, you're waiting for an ETF to be able to invest in Bitcoin. Or if your compliance department just really isn't comfortable with it, or if you can't custody assets on behalf of clients, you're really waiting and chomping at the bit for an ETF. We run a study every year on our clients, and we ask them, what are they waiting for to invest in crypto? And 60 to 70% of the responses say an ETF. So I think it's really important because it's going to unlock a huge flow of demand that has been sidelined because of the compliance hurdles and the compliance burdens around owning spot Bitcoin on behalf of clients. So that's why it's so important. It's going to unlock a huge flow of demand into Bitcoin and really, you know, open the floodgates, we think.
It's funny. I was going to ask you, like, what is the top concern for your clients when considering getting into crypto? It sounds like it's like a credibility thing, a signal that they're looking for. Anything else top of mind that you recall from clients that, in terms of like, what are they asking before they get into crypto? Like, what do they need to see in order to buy a Bitcoin ETF in the future?
So there's a couple of things. It's definitely a sign of credibility that will have the regulatory stamp of approval on a spot Bitcoin ETF or on Bitcoin as an asset. And I think it brings legitimacy into the industry, right? They hear a lot of the time because, well, I guess taking a step back, most of the financial advisors and money managers are only spending 1% to 2% of their time thinking about Bitcoin. They're not thinking about crypto 24/7 like we are. And so what they're seeing are mainstream headlines. They're seeing Elizabeth Warren running around saying crypto's only used by terrorists and money launderers. And so for them, it's kind of dangerous to even think about allocating to crypto. But when they see that the SEC and the US government has approved a spot Bitcoin ETF eventually, that's a huge stamp of legitimacy on the asset class. It kind of gives that regulatory stamp of approval. So I think that helps with that concern. But there are other concerns. There's other reasons why the professional investors don't want to just allocate to Bitcoin. One reason might be that it just doesn't fit into their workflow. Like if you think about a wealth planner, they're looking at everything their client owns and invests in and doing long-term financial planning. They're planning for their the family's retirement. They're planning for sending their kids to university. They're planning for maybe being able to afford their daughter's wedding in the future. And all of that fits into this nice buttoned up kind of TradFi workflow. And then you have Bitcoin held in cold storage somewhere that they can't wrap into the portfolio. They maybe can't bill on it, right? And financial advisors, professional investors, they want to bill on the assets that they're managing. And so an ETF helps basically pipe in those assets into a workflow that they can manage. It helps with tax. It helps with reporting. It helps with comprehensive financial planning. And it also just gives that regulatory stamp of approval. They don't have to worry about custody. They can outsource that. It kind of just fits into what they're used to dealing with and alleviates all of those concerns: regulatory, security, tax, reporting, all those things.
The future of those weddings is cashing in Bonk. I'm pretty sure Bonk's going to pay for some weddings and some houses and some boats in 2024.
It'll pay for a couple of them. Yeah, that's for sure.
All right, guys, let's get into these 10 predictions that Bitwise put out. Let's start with number 1. So first prediction, Bitcoin will trade above $80,000, setting a new all-time high.
Yeah, that one's really exciting. I think, to be honest, we tried to be a little conservative with this one, even though it is, above what the previous all-time high is, even though it is about a 2x from where we sit today with Bitcoin trading just over 40K. But I think there's a bunch of catalysts next year that will likely send Bitcoin to all-time highs. One of those we were just talking about, the spot Bitcoin ETF, that unlocks a huge amount of demand into the market that's been sidelined. We talked about there's 60% of financial advisors and investment professionals are just waiting for an ETF to invest. That's they control trillions of dollars of wealth in America. So you have assets flow or demand flowing into this asset class that should drive prices up. You also have the halving coming up, which honestly, a lot of the people that we talk to day to day at Bitwise aren't thinking about the halving, don't necessarily understand the halving, and aren't thinking about it. But obviously, it's a huge shock to the price mechanics of an asset when you have increasing demand from a spot Bitcoin ETF. You have falling new supply from the halving, and we think that creates this beautiful setup in this bull market that we're in to send Bitcoin to all-time highs this year.
We're asking for a friend, like when, like what, if you could like specify what week of 2024, that's it.
Yeah, we do kind of try to pinpoint these things in our models, but no, I think it'll happen sooner rather than later. Look, when we come up with these predictions, we kind of gather a handful of people across the Bitwise team, the research team, the executive suite, our portfolio management team. We think about what's likely to happen, and there's a lot of disagreement a lot of the time. This was probably one of those consensus bets that we all do agree it's going to go to new all-time highs, but I think the timing of that is up for debate. I think it's going to happen probably in the first half of the year. I think the setup with the spot Bitcoin ETF that could be approved as soon as January, but likely to happen before March at the latest. I think that setup with the halving that I think is landing around the end of April or early May these days, I think that's going to just be like really bullish for Bitcoin. And, it could go higher than 80K. I think it trades up there and perhaps goes even further, but that's about 15% above the previous all-time high. And, I don't think that Bitcoin would just touch the all-time high and settle out. I think it would generally, see at least a 10, 15% or more pump above that. And so, yeah, I think the first half of the year.
Perfect segue into prediction number 2. Spot Bitcoin ETFs will be approved, and collectively, they will be the most successful ETF launch of all time. That is music to my ears.
Yeah, this is a fun one. So we've been part of the applicants for a spot Bitcoin ETF in many of these rounds that the SEC has gone through over the past few years. This is I believe, the third time that we've applied for a spot Bitcoin ETF. And I think you can see across the broader market with Bloomberg's ETF analysts, Eric Balchunas and James Seyfarth, and a lot of the professional ETF analysts in the space, that they think there's a really high likelihood that a spot Bitcoin ETF is going to be approved this year. We also think that there's a high likelihood that a spot Bitcoin ETF is approved in 2024. The record for the most successful ETF launch is held by the Qs, and that's about $5 billion in its first year. And so we think that a spot Bitcoin ETF will surpass $5 billion in net flows in its first year, and then we think it could grow as big as $72 billion in the next 5 years, and we're really excited about where it can go from there.
All right, Ryan, we haven't queued you up with any questions beforehand, so this is totally off the cuff. Feel free not to answer if you can't, but I'm kind of curious if you have a greater than or less than amount of flows for 2024. If I were to say 15 billion in flows in 2024, would you take the over or the under on that?
Oh man, that's a fun one. I think I would take the under on that, even though, well, I think it depends, right? If you think about net new flows, then I would take the under. But if you're thinking about, if Grayscale's GBTC product gets converted into an ETF, you count those in that flowing into a spot Bitcoin ETF from this OTCQX traded product, then definitely you would surpass that 15 billion. But I think net new flows in year one would be less than that. I mean, we're really excited about the appetite for a spot Bitcoin ETF. But on the other side of that, to keep that argument balanced, is that most money managers aren't going to put more than 1 to 5% of their clients' portfolios into a Bitcoin ETF. It's only it fits into that alt sleeve of a portfolio, generally speaking, and they're worried about the volatility of Bitcoin and the crashes that we've seen historically speaking. So they don't want to overexpose their clients to Bitcoin. So I think, above 5 billion, definitely, but below 15 billion is where I would put that.
Not doing anything with predicting around when the approval happens. Let's just say it's January 10th. So say we get the approval. When do flows start? What kind of delays, should we anticipate or expect? I don't know how quickly some of these ETF providers can actually jump into action and start, taking in capital from clients. Any kind of perspective on that?
Yeah, the ETF mechanics are actually really interesting. Matt Hogan, our CIO, is one of the godfathers of ETFs, and so would love to get him on for you guys to talk to him about the details of ETFs. But there actually is a nuance there where the January 10th deadline is for the 19B4s, which is basically a application for a rule change to the SEC to allow the issuers to list a spot Bitcoin ETF. But then there could be a delay. It could be a week, could be 2 weeks before trading actually commences, when the Form S1s, which are the fund prospectus that outlines all the risks and disclosures of a fund, before those get approved. And you can't start trading the spot Bitcoin ETF until both of those things happen. So there's all this focus on January 10th because that's when the ARC21 shares application, spot Bitcoin 19B4 application is set to be either approved or rejected, and we think the SEC will approve more than one at a time. So that kind of sets the deadline for all of these ETF applications at January 10th. But then there should be a little bit of a delay. I don't think it'll be huge. I think if they approve 19B4, they'll approve the S1s, and we'll see trading commence in January. But there will be a little bit of a lag.
Yeah, I'm hoping we get a nice surprise here to start 2024 with that getting approved. Okay, let's move on to your third prediction. You state Coinbase's revenue will double, beating Wall Street expectations by at least 10x. I don't know if you can recall off the top of your head some of the reasons that went into that. You gave three main reasons in the article relating to the bull market. Number two was innovation relating to L2s and on-chain identity, perps futures. And then you also mentioned Coinbase is a primary custodian for all ETFs. So,
gosh, this is so crazy. When we went to look and see what the Wall Street analysts were projecting for 2024 revenue for Coinbase, I honestly was mind blown. The 2023 estimates were right around 2.8 billion. And so I would have expected, we're heading into 2024. We're clearly in the first stages or early stages of a bull market. We have all of these catalysts on the horizon. 2023, for the first few months was not quite the bull market that we've seen the through the latter half of the year. And so I would have expected the revenue estimates to be much, much higher than they were, but they were only about 10% higher than this year. So we have 2.8 billion expected in 2023 by Wall Street analysts. They had 3.1 as their estimates for 2024, 3.1 billion. And that honestly just struck me as really shocking. I mean, we have like you said, so many catalysts here. There's all this innovation that Coinbase has been going through. They've released the layer 2 scaling solution for Ethereum called Base, which saw a ton of traction earlier this year, and I think is reaching all-time high levels of TVL right around now. I think I saw Brian Armstrong tweet about that yesterday. They have on-chain identity. They have their wallet app, which is really a tremendous way to onboard people into the crypto ecosystem. A lot of the spot trading that we're seeing around a lot of these altcoins or new tokens being released are happening on Coinbase. Their trading volume tends to really spike during bull markets, and so they've historically made a ton of their money on transaction fees on trading volume, but now they've expanded their product suite into these new innovations. They have perpetual futures and regulated futures contracts that they're trading. They're allowing U.S. customers to trade. They're the custodian for, I think, 9 of the spot Bitcoin ETF applications, right? So they take a little bit of a fee of every dollar worth of assets that goes into spot Bitcoin ETFs. And they have revenue share with Circle around USDC, which I think will come back this year from an AUM perspective. And so there's all these catalysts. And so we do think that their revenue will grow next year. I think it was a pretty easy reach to beat Wall Street's expectations when I saw just how low and just how, frankly, bearish Wall Street expectations were. I just don't think they understand Coinbase as a stock, honestly.
I think, yeah, as you mentioned, there's a bit of a disconnect there. Like you really have to have paid close attention to these bull runs to know that it tends to always exceed everyone's expectations. Coinbase being like a true like crypto bank that has like tentacles into like all of the different aspects of DeFi that we talked about there. I mean, it's wild to think about all those products. The fact that Binance is in the position that it's in. Binance was always kind of, I think, the elephant in the room. How does Coinbase compete with these guys offshore doing all the things that retail users or any user wants? And meanwhile, you have this like Boy Scout that is Brian Armstrong. And I will say, I didn't count on the Boy Scouts winning, but like they seem to have sort of like won the long-term battle here. So yeah, real credit to them. And I'm also thinking that even 10x could be like underestimating like where they go in 2024.
Yeah, I totally agree. I mean, I didn't even mention the fact that they've eaten so much market share up with the fall of FTX, with Binance kind of losing its place as or I guess losing some of its place as the leading exchange around the world with what just happened with their settlements with the DOJ. And that certainly helps prop Coinbase up. And it definitely is one of those, like, we think it's the super app of crypto. Like, it has tentacles in every single area of the market. Infrastructure, they have that scaling solutions, they have that wallets, stablecoins, trading, futures, institutional custody, and other services. Like, it really is insane to me how large that business has grown and how underestimated that business is. So it's really exciting. And also, by the way, just before we move on to the next one, if they were to double their revenue next year, it would still be lower than the revenue that they had in 2021, which was kind of the height of the last bull market. And so this isn't even predicting an all-time high revenue. Yeah, it's just working its way up there.
Hey, Ryan, do you know the venture fund that is within Coinbase? Like, are those investments? Is that like is all of that money included and reported in Coinbase's filings? Like, I've never fully understood if it's like a separate entity, but I've thought a lot about like the venture investments they've made as well, and just what sorts of like insane unrealized returns are probably sitting there.
Yeah, I do. That's a good question. I do believe that it rolls up into their broader kind of financial outlook and flows to their bottom line. That's a really good question. I mean, yeah, they have Coinbase Ventures has their hand in so many projects, and they have had their hand in so many projects from early on. And so that's another pillar of them as a super app, that if you just want exposure to any part of crypto, you can get it through Coinbase, and anyone can buy Coinbase in their brokerage account. Any advisor can allocate to Coinbase regardless of the platform they're on because it's just another equity. And so, yeah, it's a really exciting business model.
All right, guys. Prediction number 4. More money will settle using stable coins than using Visa. I personally love this one just because I kind of point to it when normie friends are like, well, like, what's the point? Like, what is crypto even solving for? Like, there's no use case. And I'm like, well, did you know that, look how much is settled like in 2023 or even 2022. Like, it is like highly impressive. And I think a lot of people don't realize, to your point in the article, just how close it's getting and how close it is. So yeah, maybe give us a little more context on that one, Ryan.
Well, look, I get so excited about stablecoins. It's like one of the things that I really nerd out about. I feel like DeFi Dad. I feel like you nerd out about stablecoins as well. I see it on Twitter, and I love it. It's the killer app for crypto. I mean, there's literally trillions of dollars in stablecoins being used to send money back and forth between people to pay for goods and services. Most venture fund deals in crypto are made using stablecoins like USDC because it's just easier, it's just cheaper, and it's quicker, and it's just an overall better experience for people than using the traditional financial system. I can't tell you how many stories I hear of people, sending checks to someone abroad or trying to make an investment deal, and the money gets stuck for days or weeks at a time, or gets returned, and the amount of fees that go along with it. I think we did a study recently, and the average fee on a global remittance is somewhere around 8%. And which is wild. I mean, you send $100 to someone in another country, you're losing 8% of that. You're losing $8 just to fees. And so, we really like this comparison of stablecoins to Visa's payment volume, and we did this because we don't think people really grasp how large stablecoins are. Like, it's not to say that obviously I'm not trying to say people are dumb or anything like that. I just don't think people grasp how big of a number $1 trillion. It's like, it's 1,000 billions. Like, it's such a big number. And we're seeing stablecoins, they almost hit 8 trillion in volume in 2022. In 2023, there was a little bit of a slowdown. We only looked at the first 3 quarters because Visa hadn't released their payments volume for Q4 yet when we put this report together. But we do think that this is going to really continue to climb. And we think it's an interesting comparison because everyone knows who Visa is, and not that many people realistically around the world know what stablecoins are.
One of the things you're sort of referring to there, Ryan, that I know we've talked about previously is stablecoins are a reminder that crypto already works and that there is a mass adoption. The issue for crypto is, and DeFi in general, is there's always this moving of the goalposts. Like, it's always the assumption that we have to basically make everything work. And if you go back years ago, if I go back to like the 2017 bull run, I remember using Litecoin to move between exchanges because it was cheaper than Bitcoin, cheaper than ETH. It was still very volatile, but it was better than nothing. And then you get into like 2018, 2019, you start to use things like DAI, you've got USDC starting to work. You have Tether, which was like still living with all the FUD around it. And so anyways, like, you fast forward to today, and I was looking at DeFi Llama. I think there's like around, by the way, I'm sure we're missing some stable coins in this, but it says there's about 130 billion in stable coins across all the different, L1s and L2s. And so, yeah, like today, I think about all the ways I'm using it, and I'm not forcing myself to use it. Like, if we are, needing to do, some sort of like transfer to a new wallet for Fourth Revolution Capital, like, we're obviously using stable coins in most cases. If I do an angel check or we do a check through 4RC, we are absolutely using stable coins. It is so rare that we will use the US dollar and do a wire transfer. In fact, at this point, I'm almost like alarmed when someone asks me for the wire transfer, thinking like, okay, like, why are you guys not using stable coins? Like, why are you not using it in some sort of like a multi-sig? And, if you aren't, like, question is like, are you not here to use all of this technology that's already been built? So anyways, to, I think Nomadic's point also, the next time you have a friend who's like, saying that crypto's dead or whatever, whether you're in a bull or a bear market, I do think stable coins, it's like one of the proof points of like, this thing just keeps growing in whether we're in a bull or bear market. And I think it's one of the things that's going to go parabolic by the top of this bull market that we're now in.
I'll just say I absolutely agree. I think stablecoins are also such an amazing business model. Like, they just take in dollars, they invest them at 5%, 6% yield, and they create this great utility for their users. And so, yeah, I think I just love stablecoins. I think it's a wonderful product.
If you're listening to this podcast, there is already a podcast out on Athena Labs. We just covered them. They are going to use this like wild mechanism where you're earning yield with staked ETH, but you're also shorting ETH on different exchanges and different decentralized exchanges. And anyway, long story short, the yield that it's netting for stablecoin holders, like as of today, it was like 26%. I do think like these double-digit numbers will sustain for a certain amount of the bull run, and possibly into the bear market. The one thing though to just be cautious of with these sorts of like new stable coins, and these sorts of like yield mechanisms where there's either leverage involved or shorting, just be aware there's a ton of risk to this, of course, especially being new. But that said, I mean, I think the folks that are using and holding stable coins and playing with all these new protocols, they have that risk profile. So anyways, check out that podcast on Athena. Ryan, let's move on to prediction number 5. I promise the rest of these predictions will go a little bit faster. The first few here just really require a little more context. You mentioned JP Morgan will tokenize a fund and launch it on chain as Wall Street gears up to tokenize real world assets. This is a big surprise to me. Can you share why you believe this will happen? Only because I know JP Morgan is doing a lot with crypto, but I also know that Jamie Dimon, for whatever reason, continues to be very vocal and in terms of his skepticism. I even like recently noticed it looked like he was agreeing with Elizabeth Warren. I never thought I'd see the day where Jamie Dimon and Elizabeth Warren are in cahoots with one another.
Yeah, that was a wild thing to observe, and I also never thought I'd see that day. But this prediction really comes down to, JP Morgan is a bank, it's a financial institution, it's going to follow the money, and they've recently experimented with tokenizing funds on Avalanche, as a lot of big banks have done. Franklin Templeton has an on-chain money market fund that invests in treasuries and passes yields on to the token holders, and there's a lot of different experimentation going on. JP Morgan has actually been, I'm sure you're aware, experimenting with blockchains for a few years now. And they recently did this test on Avalanche and released a report finding that there were hundreds, I believe, of steps that were removed just by issuing tokenized portfolios, or just like managing portfolios on chain in a tokenized matter. That's rebalancing and redemptions and distributions and all of that. And so, and trading. And so we think that this will happen. We think that JP Morgan might be posturing at the highest levels to try to, protect their business from what could potentially be somewhat cannibalized by the efficiencies that blockchain technology and that DeFi bring. But we also think they're not going to miss the boat, and they're going to dabble. And this is a booming industry. I mean, it's grown up to above 5 billion in the past 2 years. And so it definitely is something that they can't shake off and can't ignore. And so, yeah, we think that they will embrace those efficiencies and launch an on-chain product next year.
Ryan, I think the number in this full prediction list that kind of blew me away the most was the 2030 prediction for total tokenized value on blockchains. And this was by the Global Financial Markets Association, but their prediction was 16 trillion of tokenized value on blockchains by 2030. And like that kind of floored me. I mean, you just mentioned we're around the 5 billion mark now. So like that is incredible if that happens, but
absolutely. I mean, that the Global Financial Markets Association includes people from firms like Boston Consulting Group who are analyzing the space, and obviously big financial institutions rely on those big consulting groups for a lot of their long-term strategic vision, a lot of their long-term planning. And 2030 is not that far away. It's 6-7 years away, and so do think it's going to grow into a very, very big business, and 16 trillion, again, is a huge number, but the opportunity is there, and we think that it's ripe, and that these big financial institutions. For better or worse, I know a lot of people deep in the crypto industry don't want institutions to come in, but I think, that's the nature of permissionless, decentralized protocols. Anyone can use them, and it would be almost irresponsible for these financial institutions not to embrace this new technology.
All right, prediction number 6, Ethereum revenue will more than double to $5 billion as users flock to crypto applications.
This one I find really interesting. I mean, I came into crypto kind of through the Ethereum lens. Like, I'm a kind of diehard Ethereum for that reasoning. I think Bitcoin's great. It's a really amazing asset. It's actually grown on me over time. But the concept of being able to build anything on a decentralized internet was really what led me into blockchain technology and really grabbed my interest and my passion for the space. And so I'm really excited around just how big Ethereum's continued to grow. And, as revenue or as activity fell during the bear market, we obviously saw those revenues compress. But I just think we're really set up to see a really big boom year for Ethereum in 2024. We actually debated here, should we say it's going to double or triple, because our expectations are so high for where we think Ethereum will go. And, I know there's a lot of hype around Solana these days. I'm using protocols on Solana like a lot of people are, but I still think, Ethereum has such strong network effects, and so many people come into the space and have been building on Ethereum and now layer 2s for years, that we'll continue to see other ecosystems flourish, but Ethereum will still take large market share. And I think that will drive their revenues up year over year and into the future.
Let's move on to number 7, probably the most important prediction of all. Taylor Swift will launch NFTs to connect with fans in new ways. Tell us about the undercover Swiftie fans at Bitwise.
Oh man, there certainly are undercover Swiftie fans. I don't even know if it's undercover. I actually, my Spotify Wrapped this year had Taylor Swift on there. So we're fully embracing our love for Taylor Swift. And really, she's been one of those obviously she's the most popular artist in the world, arguably. And she was the #1 streamed artist on Spotify last year. I think it was 25 or 26 billion streams last year. It's an insane number. That's, I don't know, four times the amount of people on this earth. And so, so many people are a fan of her music. She also has this really unique way of engaging with fans in the past. She obviously is a really strong believer in monetizing and owning her own music, and also having direct connection with her fans. And so, NFTs, whether it's ticketing NFTs, whether it's token gated playlists, whether it's other token gated experiences, NFTs are so well suited for music and for artists to connect with their fans, or whether it's, allowing them to earn some money through royalties. There's all these really interesting things you can do with NFTs as it relates to music. And Taylor Swift is just one of those artists, that is really embraces interacting with her fans in unique ways. But also, if she were to do this, is one of the largest fan bases in the world, and would be a huge level up for people embracing crypto who maybe, aren't even aware of crypto as a thing, or definitely aren't aware that you can do anything associated with music and NFTs. So really, really excited about this one, and hope it comes true.
Ryan, do you have any sense of which chain or chains might have the advantage there? I could clearly propose that she goes for something like, let's say Solana. There's a vibrant NFT community that's there right now, but I think about who's been hosting NFTs related to music, and I start to think about well, that has been on Ethereum, that's also been on Polygon. There's also, I even thought of the business machine behind Flow, all the work that they've done with NFTs, with humongous globally known brands.
It's a really interesting question. I mean, I would guess Polygon. So I would guess within the Ethereum ecosystem, there were so many celebrities that actually were burned by, this is going to be a roundabout thing that might not, I guess we'll see how this connects, but there were so many celebrities burned by their affiliation with FTX and Sam Bankman-Fried. He obviously had ties to the Solana ecosystem. Now, I don't believe those exist anymore. I'm not trying to conspiracy theorize around this, but I think that if you're jumping into crypto, and I think it came out that Taylor Swift was even approached by FTX at one point for some kind of endorsement deal. I just think that her team would look at Solana and would, perhaps ignorantly just write it off because of that potential close connection that used to exist between Solana and SBF and FTX. And so, again, I don't think that exists anymore and was probably largely overblown in a lot of ways. But for that reason, I think their team would make their way back to Ethereum and music NFTs in general. I mean, we talked about the security benefits you get from Ethereum. Like, you can imagine a world where Solana does have some downtime, and that's like right before, during an event that is big for an artist like Taylor Swift, and that could be really bad for their brand. Like, Ticketmaster went down when Eras tour tickets went on sale, right? And she was very outspoken against that. And so I think they would go for a chain that, you know, has more uptime. And I think Polygon's marketing team and just in general, that ecosystem is really well suited for something like this.
Prediction number 8. AI assistants will start using crypto to pay for things online, affirming crypto as the native currency of the internet.
So this one, you know, there is an element of where we've seen some experimentation so far with AI agents, or like ChatGPT agents or assistants, using or getting access to a multisig where there's some USDC seated there, and they can then go and spend that, whether that's to like send a payment to another person, or I mean, perhaps make a trade on behalf, like a rules-based trade on behalf of the owner. But I think broadly speaking, this one is more along the lines of everyday use, like creating ChatGPT agents or AI assistants that can go and do things like buy headphones if you're break, like book an airline ticket, or you know, make a reservation that requires putting some money down. And there's obviously two-sided. Like, on the one hand, you need to have more adoption of AI agents and more seamless connection from them to like a multi-sig that you seed with some USDC and give them approval to go spend. But then on the other hand, you also have to have the merchants that are willing to accept stablecoins and crypto as a form of payment. And so I think, you know, as both of those things grow in popularity over the next year, we could see this become more and more common. And it makes sense that internet native technology like AI would prefer internet native currency like crypto.
Well said. Okay, prediction number 9. More than $100 million will be staked in prediction markets, which will emerge as a new killer app for crypto. I have to say, of all the apps out there, this is one I've just been bearish on for years. It's never felt degenerate enough to catch on. And I could see this, though, if you're referring to prediction markets as in sports betting, and if you can add leverage to that, then sure, maybe there's a possibility. But yeah, curious, Ryan, what are you thinking here? Like, why prediction markets?
Yeah, well, I love that, by the way. I mean, sports betting has become huge. And so adding leverage to that sounds really spicy. Look, prediction markets are something that I've gone down the rabbit hole on and just find so fascinating. I think when we saw all of the chaos around Sam Altman and the OpenAI, you know, firing him as CEO and all of that, there was like this prediction market over that entire 5-6 day period that was moving constantly around whether people thought Sam Altman would return as CEO or wouldn't. And I think what that tells us is that people love to speculate on things other than including sports, but other than sports. They just love to speculate on events, and crypto is so well suited for doing that. We've seen this huge rise of online sports betting and online gambling, and I think there's just a huge appetite to bet on other things in the world, like election results or games, sports, pop culture events, outcomes related to, like I said, elections or any number of things. And anyone can spin a prediction market up. You don't have to be some company like DraftKings or something like that in order to do this. And so I really find it fascinating that anyone can bet on anything at any time. You can make a market for it. And I think it's really exciting new technology.
Yeah, I'm excited as well. I think one of the kind of early, I guess, cold start problems or chicken and egg problems has been getting enough seeded liquidity for each market. And as kind of DeFi Dad was alluding to, I think with a bit more speculation, you can bring in that liquidity that's needed for those individual markets. And then that'll just be that flywheel that helps create more markets. But yeah, I could go down that rabbit hole further as well, Ryan, but let's get to prediction number 10. A major upgrade to Ethereum blockchain will drive the average transaction cost below 1 cent, paving the way for mainstream uses. What are you thinking there?
Yeah, so this one really comes back to layer 2s and scaling Ethereum so that it can be more usable by end users and developers. And so this is actually one prediction that we thought was going to come true last year, but I think EIP 4844 rolled around a little bit from a timeline perspective. It is now falling into 2024. And so, this won't do much for Ethereum mainnet fees, but what this will do is allow the cost to transact on L2s come down significantly once EIP 4844 is implemented. And so, for those use cases like gaming or prediction markets or ticketing or micropayments to really become usable by the everyday average person who's maybe not crypto native and hasn't been in the space for a long time, you need to have low fees. I think that's one reason why people coming into the space are loving Solana right now. If you go and transact on Solana, it's so quick and it's so inexpensive relative to transacting on Ethereum, and you don't have to worry about bridging or anything like that. And so once we have this world where people are automatically onboarded onto L2s, maybe through Coinbase and Coinbase Wallet, and they can just automatically go into Arbitrum or Optimism or Base or Polygon, and the cost to transact is sub 1 cent, is a fraction of a penny. They won't even think about the money they're spending anymore, much like you don't think about it when you're using something like Solana. And that just frees up a ton of use cases, and it makes it more attractive for developers and entrepreneurs to come explore building new use cases and new ideas on these platforms. And so this is one area that we're really excited about from a technology upgrade perspective within the Ethereum ecosystem.
To get transactions down to that cost, like that's always been one of the end games. And I know just last night, I was looking to do a test transaction on a newer protocol. This one just happens to be on Ethereum mainnet. And I can't even tell you all the thinking I did about like, okay, well, where am I going to move this from? Should I do this right now? Does this even make any sense? Like, because I knew it was going to cost me like probably 20, 30 bucks to do this transaction. Meanwhile, the amount of transactions I did on like, let's say Solana, just actually this morning with another wallet, I probably did about a dozen transactions for just dirt cheap. I know that some of our L2s are nearly there. The one that we're most excited for is ZK Sync has this major upgrade in motion already, and that's going to eventually get us to that like pennies per transaction. So anyways, the TLDR on this is if you've been in crypto for any length of time, like the future's so much brighter, and like there's always been hacks to it. Like using an L2 was a hack the last few years that really alleviated the stress of using Ethereum mainnet. Now you have Solana, which is experiencing its own like resurgence of interest and all this sort of new economic activity. It's exciting. I mean, I don't know how you can't be like bullish and excited on crypto in general, specifically these chains that we're talking about. Okay, well, we've got one final bonus prediction there. Just want to call out. You mentioned 1 in 4 financial advisors will allocate to crypto in client accounts by the end of 2024. Anything else to share there?
Yeah, so this one might surprise people. We obviously work with financial advisors every day at Bitwise, and we've been doing that since 2017. And it still surprises us when we have these conversations around, how many financial advisors themselves are allocating to crypto in their own portfolios versus how many are allocating in client accounts that they manage. And I think we talked about it a little bit earlier, but the big barrier to entry here is just ease of use within the structure and infrastructure for which they operate, and access through an ETF like structure that's low fees, has daily liquidity, and fits into their reporting workflows. And so this one comes from the conversations that we constantly are having with financial advisors that today I believe it's less than 5% are allocating to crypto in client accounts. But it's likely, we think, that once a spot Bitcoin ETF comes to market and you have that stamp of regulatory approval, that legitimacy brought in, that high performing asset class relative to other assets like stocks and bonds that just frankly don't look that great right now, look kind of gross right now. And so for that reason, we think that we'll see more and more financial advisors allocating to crypto in client accounts as it becomes more of a mainstream asset class, and they start to see the benefits that adding crypto to an account, to a portfolio, can really add. Like it brings down it increases the cumulative returns. It barely impacts volatility, and it actually bumps up your risk-adjusted returns because of that significantly. And so those are some of the studies that we walk through with advisors when we run portfolio simulations and say, hey, if you added 1% to your traditional portfolio or 5% to your traditional portfolio, the volatility of the portfolio wouldn't change that much, but your potential upside would be significant and your risk-adjusted returns would increase significantly. And the maximum drawdown you would experience at a 1% allocation is really minimal. The S&P 500 or the NASDAQ moves 1% any given day. And so we just think it's going to become more of a mainstream asset, and clients will demand it and advisors will be able to access it. And it just seems like the glove will fit there.
I can't remember, Nomadic, who it was, but recently someone posted on Twitter that like, you need something like 5% of your portfolio exposed to crypto. And I just remember we were kind of chuckling about it because I was like, is 90% good then? Is that okay? Because am I good? Like I was like 5% in 2023 with a Bitcoin spot ETF like right around the corner. Ryan, thank you so much for being able to join us. Like, this is a great place, I think, for us to start to wrap up. One thing I'm going to do, and this is under the assumption that the commercial that you all recently released for Bitwise that stars the guy from the Dos Equis commercial, if folks ever saw that, the most interesting man in the world, I'm going to assume that the audio will still play well for our podcast listeners. So we will go ahead and cut to that here so you can hear this hilarious commercial. And if you're watching here on YouTube, hopefully you can enjoy it there.
You know what's interesting these days? Bitcoin.
Cut. What if we get him?
You know what's interesting these days? Bitcoin. Look for Bitwise, my friends.
On that note, now we can go ahead and end the podcast. First, you can learn more about Bitwise by going to bitwiseinvestments.com. You're going to want to follow Bitwise on Twitter. It's at BitwiseInvest. You can follow Ryan on Twitter. His handle is RasterlyRock. And then Ryan would love to give you the final word then. This is probably one of the best podcasts I think we've recorded all year, Nomadic. I think this is one of the most like playful conversations. And this is probably a podcast that is ideal to share with your family and friends at the end of the year. Like, I feel like this is a nice sort of like gateway drug into the crypto space. So hopefully folks listen and enjoy this during the holidays. But Ryan, yeah, anything else you'd like to share before we go?
Yeah, guys, listen, thank you so much. I really appreciate you having me, Nomadic DeFi Dad. It was great talking to you. You can find all of our research materials that we talked about here and much more that we published at the Bitwise website. We make all of our research and educational materials free for anyone to access. But yes, follow us on Twitter. We love to talk about crypto and cover crypto, and we're really excited about next year. So thanks for having me, guys. Looking forward to potentially return sometime in the future and maybe talking about a spot Bitcoin ETF.
We would love to have you back, and let's have you and Matt when that Bitcoin spot ETF gets approved. Thanks everyone for tuning in. If you're a talented founder or developer, please consider reaching out to our team at fourthrevolution.capital. And for future episodes of the Edge podcast, please check out our link tree at edge_pod.